A mixed day in the markets. I'm Michelle Berg along with Tommy Grisafi with Advanced Trading. And Tommy, that mixed market activity, a lot of that is just money flowing into the quarter going on, isn't it?
Yeah, you're seeing money come in and out of the markets, whether it be crude oil. Can't quite get a grip on what's going on with that. At one point, up $3.50 today. Definitely seeing some profit taking action in the cattle, live cattle, and feeders. That was interesting, especially the way they opened up with that strength and then turned on a dime and went lower. Seeing price action there, that's pretty interesting. Corn is that we're dealing with that big carryout. And as long as we have that carryout, it's going to be, we're excited that corn's rallied 4 days in a row. Yet when you look at a chart, it's just a small blip up compared to how much higher we were. I still hear stories daily. I told you off the record of people who have old crop corn calling in, say, hey, it's going to bounce. I don't know at what price they had their targets at or what they would have been happy with a sale. But as the markets drop, believe it or not, we're finding more grain, not less grain, as people start to
Mhm.
make that room and empty the last bit in the bins and get ready for harvest 2023.
So if corn has kind of corrected our oversold status, we got kind of up into some resistance areas that we couldn't take out. What would it take to get us through those areas?
Well, I do think if corn approach $5 futures, you're going to see large farmers selling. Right now, the farmer has to make that choice: store a lot of corn, some corn, how much they afford sold. I imagine a lot of beans have been priced already and are going to continue to get priced off the combine. But we were going into this year in a very low stock situation, so there should be a lot of on-farm storage. We know the farmer has the ability to store it and has the money to wait a little bit. But as we come into one of those decisions, would a 15-cent rally in corn buy some bushels? Probably. If we went from 4.85 to $5 futures, that might, people who are truly going to price corn off the combine at harvest would be making some sales.
Yeah. So the August or the contract, November contract in soybeans went down, tested the August low, and then came back, and we're above it now. We're above 13, but how much more of a correction can we really anticipate here? Because we kind of hit resistance again today, didn't we?
Yeah, absolutely. Monday we made those lows, and things look pretty ugly. It could have been scary if we continue to go down there. Again, who knows who's buying it? Could be people covering shorts, speculators, China. Lots of reasons to buy a soybean with the 12 in front of it with our current ending stocks. But we bounced about 35 cents, and soybean market was extremely strong early in the day. Then it just weakened, and at the end of the day, it was soybeans unchanged. So soybeans about 14, 15 cents off their highs of the day. And that'll get people thinking, whereas corn had a much better day. And of course, before we filmed this, I looked at all three wheat contracts, just absolutely fell on their nose, closing Board of Trade, KC, Minneapolis wheat, all on the lows going home tonight.
Okay, so was that a function of the higher dollar, or what was going on there today?
Yeah, you had mentioned some news out of Russia. Maybe you could speak to that more about a wheat tender, and I didn't read that. The dollar is strong. Wheat's trying to rally. Wheat's trying to follow corn. Wheat tried to follow beans, but in the end, the funds are short wheat, and it may be possible that they're still adding uh, to that short. And I wasn't familiar with the information you said, but long story short, I think Russia has plenty of wheat, and they are continuing to flood the market with wheat, and that is troublesome from the global market standpoint.
Yeah. I mean, no matter how you slice it, Russia just keeps undercutting everybody in the world. So the wheat market just keeps going lower to try to find or stimulate some demand, or what?
Yeah, and it will find it at this point. I mean, if you want to get the world markets to quit producing wheat, take it down to such a low number that it becomes painful. But it's not going to happen in year one because we've had 3 years of really big bull markets, 3 years of profitability, not only in America, but all over the world. So it's going to take more than one bad year. I mean, common sense would tell you don't plant something if you're going to lose it. Yet if you're in the planting business, you plant grains with that optimistic hope that it's going to get better. It would take several years of low prices. Great for the end user, great for the world consumer, great for world poor. Horrible if you're a wheat farmer, Michelle.
We are going into reports on Friday, and since we're talking about wheat, talk about the small grain summary first off. Is there a chance that we're going to see a little bit bigger spring wheat yields just because of what we saw in North Dakota?
Well, it's interesting. Talking to clients, they were very happy with spring wheat yields. Not a lot of complaints from where they thought they might be to where they were, and the market's reflecting that. Maybe we'll see something tighter some tighter numbers around the world with wheat or something. But yeah, we did have a very nice spring wheat crop, and it's funny how you just don't know what you have till it's in the combine.
And or in the bin. And so let's talk about quarterly stocks and where that might fall out here, because sometimes that can be a pretty volatile report.
Yeah, and advanced trading just sent out the numbers, and I still have to look at them and crank them in and out. And the not the problem, and, I don't want to sound like I'm complaining, but a lot of data comes out all at once at 11 o'clock, and the computers get the first look at the numbers. So the high frequency traders get it, and that's why you see these blip ups where corn trades up 12 and closes down 12 or something like that, and you're like, what were they thinking? That's not a human doing that. So the computers, regardless what I think the numbers look like, advanced trading's numbers, supply, demand, carry out, the computers are going to get the first look at the number. That'll create the initial volatility. And then we'll ease into the true fundamentals of what those numbers mean.
So the cattle market made all-time highs last week, and we've been kind of correcting ever since that. Is that a function of the nervousness of this market about the macroeconomic situation coming out of what Powell said, or with the government shutdown looming, or what's going on?
All types of things there. So the government might shut down. That's interesting. Never a good thing for markets overall. Cattle have had a heck of a run. The Dow Jones and other stock indices have really started to sell off this week. They were down pretty good today. Seeing strength in crude oil, seeing stocks coming down. You're seeing the dollar at a 106 level. And at some point, I understand the fundamentals in cattle and how bullish they are, but at some point, you just knock out the consumer. And when someone cries uncle and starts switching back to pasta, which you and I talked about how affordable wheat is, when you start switching back to breads and pasta instead of beef, then you're going to lose your demand. And once you lose that, that's going to be a horribly sickening feel, because it's going to take an incredible price drop to get beef down to get that demand back. So we had built in demand. We know the numbers in the cattle are bullish. As we lose that, as someone cries uncle and just quits consuming beef, and that will hurt all our protein sectors, Michelle.
Sometimes the charts give us those signals, though, before the fundamentals catch up. Are you seeing that on the charts?
I know that yesterday's selling was aggressive. Today's selling was interesting, that we tried to rally. Uh, Today gave me more confidence that every rally needs to be sold. And if you're selling at big profitability, it's not as scary. It's not like selling into a losing uh, uh, trade here in cattle. But everyone wants to have been 100% hedged up at 2 days ago's prices, and that's just not how markets work. I will warn everyone that cattle have expanded limits and much wider limits than in the past, and that could be very. If we do go limit down, it's going to shock you at what that is. If they have an extended limit, that'll really knock you off your pants, and just be prepared, because it's not uncommon for once this thing turns over to really go.
No doubt. And we haven't had the volatility necessarily to signal like a blow off yet, but that could be coming. I
It's
want
like
you to,
Yeah, it's like cattle have been blowing up for like 6 months. I mean, every
I
day if
know.
I watch your show, you're like new all-time highs in cattle, but we never did get that limit up, limit up. Okay, they blew it up. It just kept going up.
Yeah, it's been pretty methodical. So maybe it keeps going. I don't know. Okay, let's talk about outside markets, because that's really one of your strengths. Okay, crude oil, are we going to hit $100? And what is going on with the rest of the macroeconomic climate here in terms of inflation?
Explosive rally in crude oil hit $94 today. At one time today, crude oil was up $3.60. We were $64 4 months ago. So 90, 100 days ago, $64 crude. The government was supposed to fill up strategic reserve. They didn't. You're seeing Russia and other countries organized to produce less crude. They are really, look at what we're saying on the show. They're flooding the world markets with wheat, and they're sticking it to the American consumer and worldwide businesses, especially airlines and everything else, on fuel prices. It's a very organized rally by uh, a certain group of people. Don't want us to see Americans do well. Now, as Americans, we have plenty of energy, and we just didn't use it due to government policy. I don't even know if you're allowed to blame anyone or call anyone, but it's not good. We have the energy here. This doesn't have to be this way. And maybe, Michelle, maybe it's planned. Maybe this is the next big push to electronic vehicles or whatever we're trying to do with solar. But heck, we can't even get the United Auto Workers to agree, and that is affecting the market. United Auto Workers strike, crude oil going up, American consumers losing confidence, in my opinion, and very stretched when it comes to credit card debt.
Yeah. And obviously, this could push the Fed into keeping interest rates higher for longer. What does that mean for farmers out there? And are they taking that into consideration at all this year in their marketing decisions of whether to sell or store?
Very much seller store decisions are being talked about daily here at the office and will continue to do it. I think the real reality of what interest rates are and what they become will happen in Jan, Feb, March when the grain's in the bin, they have sold what they've sold, they've prepaid taxes or prepared for taxes. And when that time, if they do owe money to the bank, when it's time to pay down operating, the reality of how much they paid in interest will really start to hit. And the old days of storing grain for a year because interest rates are only 3%, that 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 mathematics is past. So there is a chance on the scary side that grains can continue to go down and you can have an unsold, unprotected bushel that you're paying 10% interest on. If they're not paying attention, they will be soon, Michelle.
Thanks, Tommy. Tommy Grisafi with Advanced Trading. That is Markets Now.